Hey, what's up guys? Today we're gonna talk about my thought process when I do trading. So thought process on looking for trade entries, how I analyze basically, when to enter, how to enter, what to do, how to manage, or my analysis or my thoughts when in a trade, and when to exit or where to exit based on my specific strategy or my strategy. And again, we're on EU. What do we see EU doing in a bullish downtrend? Now, what I do is obviously I would start on the 1 month because I love doing top-down analysis. As you can see, what do we see EU doing? We see breaks of structure here. At the same time, we also break structure here. So we're expecting EU. I've been explaining EU, I have been using EU on multiple times on my video. And again, we're expecting EU to continue to the downside. Now, either EU stops from this low. What I mean is this is the lower low, then it creates a lower high, lower low, lower high, lower low, something like that. At the same time, we don't know that. We don't know when is the lower low. Price could still drop to either here, here, or even lower. No one can predict the market. That's why risk management. That's why we use risk management. That's why we must have a robust strategy, have robust emotions. At the same time, backtest practice experience. Trading's not easy. It's hard. If it's that easy, then everyone be doing it. But not everyone's doing it. So we see EU on a downtrend. So at the moment, we look on lower time frames. If we see a structural shift, say price is doing this. If you see a structural shift, then again, price could either on lower time frames shifting to a bullish run to the upside to come mitigate this OB here and continue to the downside, because again, price needs to do a pullback. And what I can do also, let's go to the daily. Again, same thing on the daily, we're still bearish. Again, this was the monthly overall price movement we saw earlier, so we're expecting price to tap in within but unmitigated area. As you can see, also we see huge imbalance, OBs, and another OB. So we're expecting price at least someday, I don't know, either next year, this month, next week, I don't know, to mitigate these zones. That what we can also do is we can look for, or I personally use Fibonacci retracements to measure, or I use it as a measurement on a healthy pullback, or when to look for a healthy pullback. So what I do is I measure it from high to low. At the same time, it's the same thing with the 1 month. Come on, there it is. It's the same thing from the 1 month, from the previous high to the low. Let's just go back to the daily, see it more clear. So I'm expecting at least price to have a healthy pullback. I'm expecting price to either tap the 50% or even go a little bit higher, 50%, and go lower, or touch the 78% or somewhere this blue line to do a pullback, then continue to the downside. Now at the same time, we can look for POIs or order blocks, or basically supply zones. As you can see, we have the last up move before the downward. We can mark that up. At the same time, it's adding confluence. This Fibonacci retracement here is adding confluence, as you can see, within that zone. At the same time, the 78% here is within this supply zone over here, followed by a huge imbalance, meaning the supply zone is a very high quality one, or a very high probable zone, since it left a huge imbalance, meaning price, the banks are, or the what do you call this, the big banks during manipulation, faking out people. Oh, this is the bottom, this is the bottom, now that we're gonna pull up to the upside. Now buys up heavily, then sells heavily to the downside, meaning manipulating the buyers over here, with at the same time liquidating these lows over here. So again, we have these zones marked up, then we can refine that in the later time. At the same time, we can go, let's just delete this. So this is how I do top-down analysis, or this is how I go around charts when looking for trades, or how I look for trade entries. At the same time, we can look at the lower time frame. Again, what is the lower time frame doing? Lower low, lower high, lower low, lower high, lower low. Now we're expecting a lower high somewhere within within this zones, not just below this previous lower high. At the same time, we don't know because no one can predict it. Again, no one can predict the market. When is the lowest point of the market? Now price could continue do that to the downside, like what it's been doing here for the past couple of days, past couple of months. Now we can expect, if we see structural shifts at the downside or on lower time frames, then it's possibly shifting bullish on lower time frames for it to follow the higher time frame structural play. Again, the higher time frame, either we're expecting a pullback from this zone to down, or either this zone to down, or even just pull back somewhere here, then continue to the downside, because again, price doesn't need to follow this exact point here, because if it would follow all the time this exact points I've marked out, or the Fibonacci retracement, then in short, I'm predicting the market. But again, we can't do that. Price again could tap into this 23% of this Fibonacci here, does a pullback there, and continues to the downside. Now what we can do is mark up some zones where we can expect price and look for confirmations, then look for entry-day moves to the downside or to the upside. Now again, we were expecting this to be a lower high, now lower low. Now we're waiting for a pullback, or either again price could continue to the downside, then do that, a pullback. But again, later I'll show we see a structural shift on lower time frame. Possibly it's creating a shift to the upside, but let's continue with the higher time frame analysis. From there, you can see again we're expecting a 50% to 78% for price to do a pullback to continue to the downside, if it wants to continue to the downside and not do a pullback yet. Again, as you can see, within this 50% and the 78%, we see we see a supply zone there and another supply zone there, so we can leave that marked up. So price again, either price could stop us out from, if we try to short this, short this, short this. If price stops us out because price wants to continue higher, then we know the possible reason, or what's the most probabilistic reason why price is doing that, because again, it could want to fill the imbalance and the supply zones over here, then to continue to the downside. At the same time, it's just a healthy pullback to the upside, a healthy retracement to continue to the downside. And again, that's why you always risk management. You will have losers along the way, especially if you don't partial and have very high RR. You will lose a lot, but again, someday or at one point you will get a beautiful winner that covers all your losses and at the same time makes you profit. Now we have this marked up, so we have the swing points over here, then we also have it marked up again. This is the daily, so what we can do is go to the 4R, straight to the 4R. As you can see, it's the same thing with the 4R. Now if you just close your eyes, not close your eyes, but if you just don't look at the time frames, you could expect this. If I would say this would be the weekly time frame or the daily time frame, you would believe it because you wouldn't know the difference. It's price. That is why we believe in the fractal nature. Again, it looks the same, right? We're in a downtrend. Now we're gonna look for POIs. Again, downtrend, very heavily downtrend. No breaks of structure to the upside, so we're in a very heavy downtrend. And as you can see, we draw this out. Lower low, lower high, lower low, lower high, and lower low because it broke lower. And again, you can ask me, why would you consider this as a previous lower high or as a lower high? Because again, if you use the Fibonacci tool, again, we can measure if it's a quote-unquote good retracement or a healthy pullback or a valid pullback. As you can see, it tapped into 50%, meaning it is a healthy pullback. So in short, I would consider this as a lower high. Now we're expecting a lower low. Now we're expecting price. Let's just say it was here. Now we're expecting price to continue to the downside because again, lower high somewhere here, lower low, basically following the order flows, order flow of price. As you can see, what price did, it tapped higher, meaning it broke the structural point over here. What is happening? Broke the structural point over here. Now possibly either this is a liquidity grab or it just wants to mitigate this zone to continue to the downside, because again, in higher time frames, this looks like right now currently on the specifically on the 4-hour, we're looking at this breaks of structure. Now we're expecting either it's a liquidity grab of this structural high over here, previous lower high, or it could continue to the downside, liquidity grab, or it is a structural shift now to the upside bullish. And again, on higher time frames, specifically on the 4, it looks like this, but on the higher time frames, on the 2-day, maybe price actually just looks like this. Multiple ways, either liquidity grab, then continue to the downside, a structural shift, or again, on the higher time frame, it looks like normally like this. Right now, if we look at this, this point on the 2-day time frame is this point, meaning it's possibly breaking the structural point over here because it wants to mitigate that zone to continue to the downside, basically looking like this. Let's say we have a supply zone over here. What price that is, because on lower time frame it could look like this, then continue to the downside. Let's blue that up. Oh, that's super ugly, but anyways, let's continue on. And again, that is my thought process at the moment. So either liquidity grab, a structural shift to the upside, or a mitigation of this OB over here. At the same time, we can either mark up this OB, but again, this OB or supply zone already got mitigated by this wicks. Then again, either price wants to mitigate the 50% of it. But again, we can look for trades again over there. As you can see, we can mark up this OB over here. At the same time, this OB got mitigated. Now we can go on lower time frames to look more refined or supply zones that hasn't been really mitigated yet. Now let's go to the 1-hour. As you can see, if you go on the 1-hour, you can see that we have this supply zone here, supply zone here. This one got mitigated. As you can see, price went below it, then tapped it in, then continued to the downside. This is mitigated. Now on lower time frames, this looks like there's a unmitigated zone over here. As you can see, let's go on the 30-minute. Is it got mitigated already. 15, let's go to the 15-minute. I believe it's the 15-minute or the 5-minute. Anyways, on the 5-minute, so 15-minute, this is how I refine zones at the same time. Look for unmitigated supply zone. As you can see on the 5-minute, we have a unmitigated zone over there. At the same time, we have a unmitigated zone over here on higher time frames. Now what we can do is, doesn't matter on which POI or which supply zone or supplier demand zones you look for or you mark up. It matters on how you face it or how you approach that zone. So for me, if I look for confirmation, if it gives confirmation, then again, it's a good sell because no one can predict either price could bounce from here or here. Because again, if it stops you out, then you would say, well, bad luck. But what bad traders would do is if it stops them out, then they would say, oh, I would never look for this kind of supply zone again because it stopped me out. But what if price did this, tapped in, gave you confirmation, continued to the downside, then you would say, oh, I would look for this again. Now, this is the problem with new traders. They keep jumping on new methods, on new strategies because they don't trust the process again. You will lose in the long run. In the long run, you will take losers along the way. Big losers, you will have a huge drawdown. And again, it's part of the game. Either you try to master it or believe in the process, in the strategy, or you try to refine it. But again, let's continue. So as you can see, we're in an uptrend. So we're expecting price to continue to the upside, doing like this, either to come mitigate it, or it's a structural shift now to the upside to again to the zones where we marked. This is the larger time frame zones. That's why it looks huge. Again, price could tap in, go lower here or here. We don't know. We will just wait for confirmations and risk manage at the same time so we wouldn't blow our accounts. So price could do this, either a structural shift to the upside or a liquidity grab. As you can see, if we push up, and again, this is where you can take a trade. Now let's say we see price doing this, higher high. Now we're expecting a higher low. Now what we can do is, For me personally, I look for Fibonacci. I use the Fibonacci retracement. Again, remember, again, we don't know where's the high point here or the end of the higher high. This price could technically keep doing this and doing that, and we still have the higher high above here or even higher. Again, what we can do is wait for expectations. We wait for what price will do or what price will deliver us, and then we react. And again, if we see on lower time frames, as you can see, it's forming a distribution, or in other terms, it's breaking structure in lower time frames, possibly. Now what we can do is we look for POIs to get scalps on, or intraday moves to run to the upside, to either have this target zone here, TP, or even higher to this, some of this OB, or even this high point here if we're really expecting a structural shift. What we can do is, let's go back to the 4-hour time frame. We look for an OB, as you can see. Oh my word, what's happening? As you can, oops. Let me just erase this for a bit. Oh no, it went higher. But let's just imagine it didn't. What we can do is we mark up this OB. Again, this OB is within the 50% and the 78%. And again, remember that it's a healthy pullback. We're looking for a valid, healthy pullback. And again, we look for refinements because again, this is a very large zone. At the same time, we see this zone over here, and we can keep going down on the 30-minute. We look for valid zones. As you can see, this one didn't get mitigated yet. It got followed by imbalances over here. It's a good one. This one got mitigated, but we can go on lower time frames to look for unmitigated zone. As you can see, unmitigated zone. Now we can refine it over here for a little bit higher. Same time we have this zone, refined zone. At the same time we have this zone, but this one got mitigated already. As you can see, price went above it, tapped it over here at the same time here. So this one I wouldn't consider, maybe on lower time frames, but again, you can have POIs like this. Just very simple. We just measure, we just look at the structure, look at the Fibonacci, we look for a healthy retracement, we look for POIs, then again, we look for confirmations, either Wyckoff, push to the downside, spring, break, test, enter on that test on any demand zones over here, then continue to the upside. If it stops you out, then you can look for re-entries here. At the same time, this OB has a huge imbalance over there. Now, I'm not sure if it really went below it. I think it did. Oh, it didn't. Oh yeah, it did. Sorry, my bad. But again, as you can see, we don't know where is the high point of this structural move over here. As you can see, if we measure again, we were here earlier. I wouldn't consider this as a pullback because again, it didn't even touch the 20%, 23%, meaning it's not a healthy pullback. It's probably just on lower time frames, it looks good, but specifically on the 4-hour, the 1-hour, it doesn't look good. And what we can do is grab the high point, same thing, low point. As you can see, go back to the 1-hour. As you can see, we have a refined zone over here. We still have this OB over here, aligns with the 50%. At the same time, this lower one aligns with the 78%. Now we can still expect price to tap in, and as you can see, price broke the structural point over here because again, on lower time frames, we took trades with a group on Discord. They saw it. Some took amazing trades inside there. Basically, as they saw the structural break over here, they look for sells either here or here. But today we're focusing on here. We'll talk about it next time or in the next video. But we have a OB over here. If you play it out, it tapped in. I had a beautiful entry over here. Then we look for confirmation on lower time frames, and as you can see, again, it's very simple on what I did. Let's just go on a lower time frame to look for confirmations. As you can see, we have the 1 minute forming a accumulation. As you can see, a spring, STNB, and selling climax. As soon as it broke out, we had a entry over there. As soon as price broke out, then what we can have is a target at the high point over here. The reason why we can have a target at the high point there is again go back on higher time frames, stick on the 30-minute, just erase this nonsense. Again, as you can see, what is price doing, structure doing, breaking the structural point here. And again, we measured, remember that this OB or this demand zone over here is specifically on a 50%, meaning it's a healthy pullback. Order flow or the order flow of the market, as you can see, you already broke this point over here. Now, either it's a liquidity grab or continuation to the upside, no one knows. Again, I'm just expecting price to shift on a bullish side because again, if you remember on higher time frames, price hasn't made a retracement and it's very extended down, but honestly I can't predict. This could still go lower and again, but I'm expecting if it shifts on lower time frames on a bullish run to the upside, then it's possibly wanting to mitigate these zones or these zones over here with the imbalance over there. Now, as you can see, we have that confirmation, a great 9-to-1, solid 9-to-1 over here. And also someone DM'd me that they also caught a 21-to-1, a more refined Wyckoff entry or break of structure on way lower, more lower time frames. But again, I missed it at a more refined zone over there. Same time, as you can see, price broke above it, also had another entry there. The group witnessed it on Discord, sent it out before and when taking the trade and during the exit. So had this open at the same time. Again, doesn't mean we have one trade open, we can't look for other opportunities because again, the nature is fractal. So what we can do is, I'll explain it to you. What I mean by the fractal nature is, as you can see, we're on the specific lower time frames on the 15-minute. It's more clear on the 3-minute, I guess. As you can see, the 3-minute is forming higher high, higher low, higher high, higher low, higher high. Now we're expecting a higher low. Then we had a great opportunity over here, a 1-to-7. The reason why I entered on this point here again is we go back on the 1R. I believe it's in the 1R. Overall, on the structure, we're expecting a push to the upside, right? Again, that's why we have marked this OB. That's why we took a long over here, because we're expecting price to continue to the upside since it broke the structural point over here. And again, since the market is fractal, as you can see, as soon as it broke structural point over here, now we're expecting price to push to the upside, creating higher highs and higher lows. In short, it's making a bullish uptrend to the upside, or yeah, bullish is to the upside, but I digress. Push to the upside. Why is it pushing to the upside? Because again, overall, the story or the larger time frame structure is wanting to push to the upside. That's the probable or the possible reason why price is breaking the structural point over here, because it wants to follow the higher time frame structure. As soon as price broke that structural point over there, I didn't mean to click that either. You do the same thing again, get the fib from low to high. You can mark up from, you look for demand zones over here, the 50% or the 78%. I had a more refined zone over here. I didn't really, oh yeah, I had this marked up. I took 2 losses along the way. Again, doesn't mean I showed you my winner. I don't take losses. Again, you don't know the process. You didn't see behind the scenes how I manage, how I took multiple losses before getting good trades. Again, I took 2 losses over there. We look for Wyckoff accumulations over there, but again, it turned into a reaccumulation. I mean, redistribution continued to the downside, liquidating me. We have a more refined zone over here. Price didn't really tap into it. As you can see, price went below. Oh my word. Give me a second. As you can see, price went below this OB. We look for entries over there. It's basically just liquidating me out. Again, you don't need to win always. You just need that one good trade or couple of good trades. And again, we have a refined zone over here. As we play it out, it didn't really tap. So I got 2 losses over here. Then we look for re-entries again. As you can see, broke the structural point over here. It's the same thing again, rinse and repeat. We're expecting now a pullback to continue to the upside. Now what we can do is, we don't know where's the high point again. So we can keep trailing until we see price go lower. So either to the 23, or not the 23, but the 0.5 and the 78%. Let's play it out. So high point here. As you can see on lower time frame, it's a structural shift. It's forming a very bearish candle, meaning on other time frames, looks like this. Break to the downside. Now it's probably going to the downside to come to do a healthy pullback on lower OBs. Now what we can do is mark up this OB over here, have a OB. This OB got mitigated maybe on lower time frames. There's some more clear OB. As you can see, an OB over here. This OB got mitigated by this OB, so OB 2.0. We can also refine this, but main point is we entered here, seeing a confirmation at the same time, adding confluence to this OB is near the 50%, then this OB is near this 78%, meaning it's a good healthy zone for price to pull back. As you can see, price went down and price went up, so we can adjust again our high point over here. Price went low, again forming a healthy pullback to the 50%. As you can see, then someone in my group or in the server again also took shorts over here because they saw a structural break from this point. As you can see, it's again, they believe in the fractal nature, meaning what happens on higher time frames happens on lower time frames. As you can see, let's go on lower. I think it's the 1 minute or the 15-second. I believe it's the 15-second, and it disappeared. As you can see, price tapped into it, forming a beautiful accumulation, selling climax, STNB, and a spring. As soon as it broke out, we can then enter on the breakout. Again, rinse and repeat. It's the same thing with the higher time frame, with the other entry we took on earlier, the one over here. And again, we can have my target, and again, it didn't get greedy. This is based on experience. I had a target over here, a 6-to-1 RR, because again, I'm using this as a way to pay for my let's say if I took a loss here, or right now this is break even, so I might profit from a break even here, then also to make up some losses over here on the 2 losses I took there on the downside. At the same time, the reason why I had my entry over here, I mean my take profit over here and not at this top zone over here, because again, price, since overall we're looking at a market structure that wants to do this, price can do this, and this is like the end of New York session, so price can do a test first to the downside, then continue up. So that's why I had a way lower TP, but again, as you can see, price went above it. So I hope you guys learned something new. If you did, thank you. If you didn't, then see you soon, maybe. Thanks for watching.